You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the Deep Dive. This week, we're diving into a pretty dense week-ahead briefing. It's synthesizing everything from FX and commodities right through to some high-stakes diplomacy and, well, geopolitical friction.
Quite a mix.
It really is. Our mission here is to pull out the critical market movers, the geopolitical fault lines that are really going to shape things for the week starting October 27th, 2025. We want to cut through the noise, figure out what actually matters for the global outlook.
Yeah.
And the real hook, I think, is this incredible contrast. You've got intense diplomatic action. Those Trump-Xi talks are huge, happening right alongside just incredibly heightened global risk everywhere else.
It's fascinating, isn't it, how markets are trying to price both things at once. Mm-hmm. You've got this structured, almost organized policy movement happening.
Right.
But it's happening against a backdrop of deep, lingering geopolitical, let's call it chaos. So there's policy risk, sure, but for now, it feels kind of managed, contained around these big meetings.
Managed risk. I like that framing.
But it doesn't mean the background risk is gone. Not at all. It just means the market's found something specific to focus on, at least for a little while.
That distinction, organized risk versus, well, chaos, that feels really key. So let's unpack the numbers that show this tension, starting with currencies and commodities.
Sounds good.
The dollar seems broadly steady, kind of mixed picture. If the dollar's sitting tight, where's the real action in FX right now?
It's still the yen. That's the currency telling the story of monetary divergence. Even with Japan reporting a firmer services PPI, which you'd think might help.
Right, inflation signal.
Exactly. But dollar yen is still heavy. It's just sort of oscillating around that 153.00 mark. That policy gap, the difference between the Fed and the Bank of Japan, it's just massive.
Still the dominant factor.
It acts like an anchor on the yen that just can't seem to catch a sustained bid while that yield difference is so wide.
And sticking with policy, China's yuan fixing.
Yeah.
That seems like a deliberate signal, doesn't it?
Oh, absolutely. The PBoC set it at 7.0881.
Which is its strongest reference point in, over a year?
Just over a year, yeah. Setting it that strong.
Yeah.
It's partly diplomatic signaling. Right before the talks. Beijing's reinforcing this message of, managed stability.
So they want everyone calm. Is the market buying it, though? Or is it seen as just sort of window dressing for the summit?
That's the million-dollar question, isn't it?
Yeah.
Beijing is definitely using the currency to send a message. And we see the immediate effect, right? The risk-sensitive currencies, like the Aussie and the Kiwi.
And the Podians, yeah.
They're firmer. And that's directly linked to this better U.S.-China mood music. Sterling's holding on to some modest gains, too.
Yeah.
So yeah, the market is reacting to the signal. Whether there's deep conviction or just short-term positioning, that's harder to say.
Okay, let's shift over to commodities. This is where you really see geopolitics and trade optimism kind of battering it out. Crude oil's up a bit.
Modestly higher, yeah.
What's pushing it? Is it pure geopolitical fear, or are there still supply issues rattling around?
Yeah. It feels like a mix, but maybe leaning more towards sanction risk right now, rather than immediate physical disruption. Oil's getting a bit of a bid from that geopolitical premium after the U.S. hit those Russian oil majors with sanctions last week.
Right, that adds complexity.
It adds a cost, exactly. Now, at the same time, we did have that news about a pipeline fire at Iraq's Zubair field.
Oh, yeah, I saw that.
But, and this is, critical sources were quick to say it didn't actually curb the field's production. That's 400,000 barrels per day that kept flowing.
Yeah.
So the price is supported by sanctions risk, but a potential major physical supply shock was dodged. That kept the rise pretty contained.
Got it. Okay, now here's where the trade optimism seems to be really kicking in.
Oh.
Copper.
Yeah, copper's the big one.
It extended its rally way above $11,000 a ton. I mean, that surge is enormous. What exactly gave it that rocket fuel?
Well, copper is always that bellwether, right, for the global industrial cycle. And its spike is really tied to two things hitting at once. First, the improved rhetoric around U.S.-China engagement. That helped sentiment. But second, and maybe more importantly, we got stronger Chinese industrial profit data.
Ah, actual numbers.
Exactly. When Chinese manufacturers are posting strong profits, it signals confidence about future demand for raw materials. And copper is in everything: construction, grids, EVs.
So the market's reading the diplomatic talk as a sign of real economic activity to come.
That's how it looks. And you see the flip side in precious metals, right? Gold and silver are a bit softer. Haven demand just kind of fades when the trade news looks better.
Makes sense. Before we move fully into trade policy itself, the sources also flag something pretty significant on the energy front: a big long-term shift in LNG supply.
Yeah, this is a major signal for energy balances, especially in the Atlantic Basin, looking out over the next few years. Washington basically outlined this ambition to double U.S. LNG exports over the next 5 years.
Double.
And potentially double again after that if the demand is there. So it puts a very clear medium-term supply path on the map. It really cements the U.S. role as the dominant marginal supplier globally.
There was project news, too.
Right. Also significant. Total Energies is apparently getting ready to restart that Mozambique LNG project, which has been stalled for ages.
Okay, Mozambique LNG back online.
Or heading that way. It represents a big chunk of future supply capacity coming back onto the radar. That definitely changes the long-term calculation for buyers in Europe and Asia.
That really sets the stage perfectly for our next section, then. Trade policy front and center. Because right now, all eyes are on that Trump PG framework. This feels like the ultimate example of that organized policy risk you mentioned earlier.
It really is. It's kind of the definition of trying to de-risk things through dialogue, isn't it? Just getting that agreement on a framework for talks this week that achieved the immediate goal. It averted a near-term U.S. tariff hike on China.
Bought some breathing room.
Exactly. They bought time and a bit of stability.
And the report suggests China offered some very specific, tangible concessions, particularly around materials critical for future tech.
That's right. The source material confirms China agreed to delay its new rare earth export licensing regime.
By a full year.
By a year.
Yeah.
Now, which is a classic diplomatic move, right? Address a really sensitive point, just enough to keep talks going. Plus, the U.S. Treasury is signaling it expects China to start buying U.S. soybeans again.
Always a key political point.
Absolutely. And beyond those big items, they apparently reached consensus to just, talk more enhanced communication on specific friction points like tariffs, export controls, fentanyl. And they even specifically mentioned those 301 port fees.
Could you just quickly clarify what those 301 port fees are for anyone less familiar?
Sure. They're basically targeted tariffs the U.S. imposed on certain Chinese goods under Section 301 of an old trade act back in the day. They were meant to be retaliatory or address specific trade practices.
And China sees them as unfair.
Very much so. So the fact that both sides have agreed to actually communicate more about them suggests they're actively trying to dial down the temperature on those specific trade barriers. It's a small step, but potentially significant.
Okay, so stability with Beijing seems to hinge on these specific deliverables. But U.S. trade policy isn't just about China, is it? There seems to be this wider pivot happening across Southeast Asia, these pathways to zero tariffs.
Yeah, this U.S. regional strategy is really interesting structurally. The U.S. announced these steps aiming for what they call fair and balanced access. But the interesting part is how they're doing it.
How so?
Well, often they keep that headline U.S. tariff, like maybe 19%, which maintains some pressure.
Right, it keeps some protection.
But then they create these specific product-level pathways down to zero tariffs, but only for partners who align with U.S. goals. It's basically an incentive system. It encourages supply chain diversification away from China and rewards partners who play along, but without totally scrapping the existing tariff framework.
Clever. And are we seeing specific commitments from countries in the region that show they're buying into this?
We are, and some are quite substantial. Cambodia, for example, pledged to get rid of tariffs on all U.S. industrial, food, and agricultural imports.
All of them. That's huge.
It's a massive commitment to open access. Then you have Malaysia committing to preferential access for U.S. industrial goods, promising action on non-tariff barriers, and crucially, tying back to the China talks, enhancing U.S. access to Malaysia's own rare earth minerals.
Strategic alignment again.
Exactly. And we also saw a framework deal set up with Vietnam for reciprocal access, plus other deals signed with Thailand and Cambodia during that ASEAN summit in Kuala Lumpur. It's a coordinated regional push.
Okay, so we've got this picture of, organized, de-risking, economic outreach looking pretty positive in Asia. But then you turn the page in the briefing, and our closest neighbor, Canada, is suddenly facing more friction. Which brings us nicely to Section 3, Geopolitical Flashpoints and Unconventional Frictions. How can things be improving in Asia while the North American file gets more tense?
It's that contradiction again, isn't it? It highlights how domestic politics and maybe continental trade issues can operate on a totally separate track from the big geopolitical great power stuff. Washington announced it's immediately raising tariffs on Canada by another 10%.
Wow, okay. That's not small.
No. And it doesn't seem directly linked to the wider global picture. It feels more about specific sectors, specific political pressures at home.
And Canada didn't just take it, right? They responded immediately.
Not at all. Ottawa moved straight away to cut the tariff-free import quotas for some U.S. automakers.
Why? What was the trigger?
It seems linked to U.S. production shifts, decisions by automakers that negatively impacted Canada. So Canada adjusted its policy in response. It just shows these North American trade dynamics are still very much alive and kicking, completely separate from any optimism about U.S.-China relations. Trade friction isn't just a China story.
Good point. Okay, shifting focus to Eastern Europe, the strategic tone there definitely feels like it's tightened up. What's the latest on potential dialogue and the risk of escalation?
The path to dialogue looks very narrow, and it's highly conditional. President Trump stated very clearly, no meeting with President Putin unless there's a credible peace plan on the table first.
A firm prerequisite.
Absolutely. And meanwhile, Moscow really dialed up the tension. They conducted strategic nuclear drills and issued some pretty stark warnings about harsh responses if there are strikes deep inside Russia.
But they didn't completely slam the door on talks?
No, the door seems technically still open, just slightly. But the military posturing, the readiness signals, they're about as high as they can get.
And on the economic pressure side, we saw Kyiv, London, the EU all pushing for tougher sanctions. What new targets are on the table?
Kyiv is pushing hard. They want sanctions to cover all Russian oil companies, plus the so-called shadow fleet of tankers used to dodge price caps and the terminals they use.
Targeting the shadow fleet would be a big step?
It would be a major escalation in enforcement, yeah. London also pledged to ratchet up pressure, especially on the financial side. And maybe most importantly, EU leaders are still doing the technical work on how to actually use the proceeds from frozen Russian assets to help Ukraine.
That's the really tricky one, legally.
Extremely tricky. The goal is to use the profits generated by those frozen reserves without actually seizing the assets themselves. But the fact they're still working on it shows the financial pressure campaign is definitely intensifying.
Okay, let's pivot to the Middle East and Asia's security. Flashpoint's still incredibly hot there. In Gaza, Washington seems to be pushing for some kind of stability mechanism.
That's the read. Israel reported another targeted strike in central Gaza. But Washington seems focused on looking beyond the immediate conflict management. They're working on a possible UN resolution to authorize a multinational force.
A peacekeeping force.
Potentially, yes. And significantly, they also demanded movement on returning the remains of hostages, setting a specific deadline. That suggests a shift towards longer-term political issues and, well, closure.
And turning to Asia's security, despite all the focus on trade in the Trump-Xi talks, Washington made one point absolutely clear regarding Taiwan.
Crystal clear. And it was reiterated firmly, U.S. support for Taiwan is simply not on the table. It's not a bargaining chip in U.S.-China negotiations, period.
That provides some important reassurance for regional allies.
Definitely. Elsewhere in Asia, keep an eye on this. North Korea's foreign minister is sent to visit Russia this week. That's fueling a lot of speculation about potential leader-level contact down the line.
Which could mean
arms deals, deeper strategic alignment, things that definitely worry neighbors and the West.
Right. But it wasn't all negative friction in the sources, was it? There were also some examples of positive diplomacy and cooperation.
That's true, and it's important to remember that balance. For instance, Thailand and Cambodia actually signed a peace deal on the sidelines of that ASEAN summit.
Resolving that border dispute.
Exactly. A long-standing issue, finally resolved. That's a quiet win for regional stability. And looking forward, Tokyo previewed a really ambitious tech cooperation push with Washington.
What areas?
Studying biotech, quantum computing, fusion energy, even space. This isn't just about trade. It's a coordinated alliance strategy focused on dominating the next generation of technology.
Okay, so pulling this all together, what does this complex picture mean for you, the listener? We've covered a week dominated by that organized policy risk around the Trump-Xi meeting, a really strategic U.S. trade push in Asia using these flexible tariff pathways.
Right, but counterbalanced.
Counterbalanced by unexpected friction with Canada, and still incredibly high geopolitical risk from Gaza to Ukraine. The markets reflect this complexity. Dollar steady, yen heavy, copper soaring on trade optimism, oil propped up by sanctions risk.
Yeah, the synthesis is that global risk is definitely elevated, but parts of it are being actively managed through these very deliberate frameworks, especially in Asia. The policy framework, the rhetoric that's now established, we've delivered the knowledge on that. But now the application is key. Meaning you, the listener, should maybe stop focusing quite so much on the frameworks and start watching for the delivery.
Okay, so what are the concrete deliverables? What are the 3 things that will really move markets this week?
Okay, 3 things to watch. First, FX sensitivity. How do currencies, especially the yuan and the yen, react to any concrete, verifiable actions coming out of the Trump-Xi talks? Does rhetoric turn into actual trade flows?
Right. Deliverable 1. FX reaction to real action.
Second, oil. Watch its reaction not just to talk, but to sanction enforcement headlines. And any new supply news, especially around that huge U.S. LNG expansion plan we discussed.
Deliverable 2. Oil's reaction to enforcement and supply facts.
And finally, the big test for market sentiment. Copper. Does that massive momentum holding above $11,000 actually stick? That depends on whether Chinese policy follow-through matches the optimistic trade rhetoric we've heard.
Deliverable 3. Does copper hold its gains if China delivers?
Exactly. Rhetoric met reality. That's where the rubber really hits the road this week.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.